As far as this metal goes, silver, it is really entirely off a news-driven market that's been going on lately. I mentioned before that this jump here was really because the expectation when Bernanke spoke, he was going to announce QE. It's been expected all along for months and months and months. Stories out there. He didn't announce it, so it dropped. Then it rebounded. It basically hit this resistance point, rebounded. This was a fib level over here, about the 32.90, 33 level, a little bit below 33. Also resistance point, and it bounced. And you could say it's in a downward trend channel, but this thing can actually go up to about in this range too. I mean, 35.50. Who knows? But I bet you it don't clear this point anymore. What I think's coming on is there's going to be more problems in Europe. And really, most of these hits have been taking place when Europe has been, there's bad news coming out of Europe. I just want to look at this again, forced deal, 66 to 90% of the bondholders accept. And there was a big headline out there, I think it was like 95% of them, 94 of them accept. I'm reading conflicting stories and I don't like this. They're suckering people into the markets, and I don't know exactly when, but if I took a guess, I think it's going to be in March or April, end of March or sometime in April. There's going to be a serious plunge, and silver is not the damn thing to be in unless you're in the coins. It talks about they did do the collective action clause. They did exercise this. Rating agencies have to declare that Greece will be in default, because what's going to happen is they're forcing a deal on people, and people that don't take the deal don't get anything. So what does that mean? Default. So it's almost like they're telling you one thing, but in reality there's other things going on, and I'm going to bring on a couple other things. It goes, it's unlikely that 90% of the creditors will agree, so collective action clauses which force creditors into restructuring once a minimum number have been agreed will likely be needed. That's what happened. So they got about 86%. They didn't get 90%, so they're falling within that range, the forced deal range, 66 to 90%. But so they forced the rest of them, but they still got holdouts. They still got some holdouts. And it goes, it wouldn't be catastrophic if Greece then defaults on the holdouts. However, the latest threats have scrapped any illusions that Greece's deal with its private creditors will be voluntary. They're defaulting. It's like, so you had a loan for something, or you had something, you say, no, you got to take this. What the hell, you broke the agreement, right? Once collective action clauses are agreed upon, credit default swaps will be triggered. Even if a chaotic default is avoided, the swap will leave a bad taste in the bondholders' mouths. Private creditors will be forced to take a loss, whereas public ones will be spared. Typical, right? Then this is what I really found interesting. This might encourage Eurozone officials to try it again on other troubled peripheral states, particularly Portugal. Taboos once broken aren't taboo any longer, so they're probably going to do this in other places. And you know what? Investors are going to say, screw you. They're going to have fun trying to find people to invest in anything or buy any damn euro debt. So Greece said on Friday nearly 84% of its private creditors had joined its landmark debt swap to avoid default. A majority enabled it to force holdouts to also accept huge losses to their holdings. I don't know what happened with all the holdouts. I'm assuming some of the holdouts, well, they were trying like crazy to get 100%. But it's interesting. Now, why did the metals go up today? I noticed various news stories, but this is one of the bigger ones. Weakness in the U.S. dollar coupled with upbeat market sentiments due to increased worries over Eurozone debt tensions helped spot prices of gold to trade higher by almost 1%. So it's like yesterday, today, same thing with the oil. The oil is going up. I'm in the oil. That's the only thing I'm in. Who the hell knows if that's going to go up or down? I almost feel like selling it. because, well, the only thing that keeps me in oil is because I'm not sure about what Israel's going to do. But I would not be surprised if there's a downturn in the market this weekend. But it's really tough to tell on a day-to-day basis. I think these metals are going to get hammered. I am. I think they are, and it is going to be over the Greek debt situation. They've been declared in technical default. So nothing's going on. But it's like I'm realizing it's a news-driven market. They can drop this thing down anytime they want, just off of news. And it can go below. It can go below this low here. We just only had this low back in December 28th. Now this was basically a spike. This wasn't a closed, but actually the close price of silver was lower here in December than it was over here. And looking how it retraces, but it almost looks a lot more clear on gold. It's like a double top. It's kind of freaky, but and I can't really say too much about the technicals too much. Because a lot of times it really is a load of it. It's about what it is. But this almost reminds me of like a double top or something too. The fib points, everything kind of comes out. From this high to this low. If you retrace it, it's another indication something going on, and I think it is quite likely, we could get down into this range again, right here. I mean, that's the fib point. That's about what it was here. It's not that crazy. It's not that crazy. And if gold get hammered like that, silver's going to get hammered. The problem is, it's difficult to tell on a daily basis what the hell is going on. And that's why I'm staying the hell out of it. And I see it's something I'm thinking I don't want to hold right now. I don't want to hold this stuff. I don't want to hold it at all. Something's not looking right with this thing. And as far as silver can if gold gets hammered like that, silver can really drop like a stone. So and palladium if silver drops like a stone, palladium is going to drop like a stone, like crazy. It's gonna bust right through that 600 mark. So that's what I'm thinking. Anyway, if you're in electronic markets, I'd avoid them. The thing is with silver, how you're looking at it like this, it could be up in this range, it could go up here again, but it's going to be something. It's going to be a fast drop, and I don't know when to short it. I mean, I could say I can get into a short position, and it could be going up, but I think if I held out long enough, it's going to have a nosedive crash over some weekend or some overnight news with the euro crisis. But technically, the euro is Greece is in default. Basically, they forced these deals on people. They are in technical default, and they're going to do that same thing with Portugal, Spain, and anywhere else. So, if they don't get their money, that's making money disappear out of the system. So what does that do? They're going to have to inject liquidity and all this kind of stuff. It's not until you see a crash in the markets where they're going to come out where they're going to say, we're going to do all kinds of QE, liquidity, creation of money, and that's what's going to drive it up. It's got one more crash to go, but don't be fooled by this. Don't be fooled by this. If you got coins, it ain't going to matter. I mean, you're just holding a bunch of shiny silver coins, but don't be fooled by this junk. That's what I'm going by.